The next question is E21.5. Morgan Leasing Group signs an agreement on January 1st, 2022 to lease equipment to Cole PLC. The following information relates to this agreement. 1. The term of the non-cancelable lease is 6 years with no renewal option. The equipment has an estimated economic life of 6 years. 2. The cost of the assets to the lessor is 245,000. The fair value of the asset at January 1st, 2022 is 245,000. 3. The asset will refer to the lessor at the end of the lease term, at which time the asset is expected to have a residual value of 24,335, none of which is guaranteed. 4. The agreement requires equal annual rental payments beginning on January 1st, 2022. And then 5. Collectability of the lease payment by Morgan is probable. So the instructions: A. Assuming the lessor desires an 8% rate of return on its investment, calculate the amount of the annual rental payment required. So round it to the nearest pound. Okay. So when we want to calculate the lease rental per period, first of all, we need to calculate the amounts to be recovered to this payment. This is equals to the fair value of the lease asset, which is 245,000. Okay, and then minus the present value of the unguaranteed residual value. So the unguaranteed residual value is 24,335. Okay, we calculate using the present value of a single sum, 24,335 divided by 1.08 at the power of 6. So the amounts to be recovered is 229,665. And then when we want to calculate the lease payment per period, we will use another formula which is equals to PMT. Okay, this is the annuity. Yeah, so we calculate the annuity. So PMT, the percentage is 8%. The period is 6 years. The present value is the amount to be recovered. Okay, 229,665. The future value is 0. And then still the type is 1 because annuity due. So each period, the lease rental payment is 46,000 from the lessee. And then B. Prepare an amortization schedule that is suitable for the lessor for the lease term. So just make the lease amortization schedule. Okay. The payment is at the beginning of each year. So we will start with 1st January of 2022. The carrying amount of lease receivable. So directly receive the lease payment at the beginning of the lease. So no interest revenue. Yeah. And then you continue again like the way you do it usually. Yeah, so the interest revenue is 8% from the carrying amount. Okay. So at the end, okay, this is the residual value, yeah, of the lease equipment. So the at the end, the lease receivable will be 0. Okay. And then C, prepare all of the journal entries for the lessor for 2022 and 2023 to record the lease agreement, the receipt of lease payments, and the recognition of revenue. Assume the lessor's annual accounting period ends on December 31st and it does not use reversing increase. Okay, so we need to record what that happened in the 2022. So in 2022, we are listing the asset as the lessor. So debit list receivables 245,000. Okay, and then you will debit the COGS of 229,665. So actually that is the present value of the amount to be recovered. Okay, so this is the sales should be 245,000, and then the inventory is 229,665. Okay, and then we will directly receive the rental payment. So debit cash, credit lease receivable 46,000, and then because the payment is on the first of the new year, okay, so we must record the interest revenue first before the payment. So for 2022, the next payment is 1st January of 2023. So we must record the interest first before the payment as the adjusting entry. So debit these receivables, credit interest revenue 15,920. For 2023 itself, we only record the rental payment. So debit cash, credit these receivables 46,000. And then the same thing, we must do the adjusting entries for the interest. So it is debit these receivables, credit interest revenue 13,540.